By the end of this video, you will be able to map an entry, a stop, and a target on any price action chart. Most beginners pick an entry and then decide the stop later. That is backwards. The stop location tells you where your idea is wrong. You map it first, then size the trade. Today, DUDU uses a hypothetical daily chart of a fictional asset called Asset X to walk through the whole process. On this hypothetical chart, price has been falling and just touched a visible support zone near the 35 level. There is also a resistance zone near the 65 level, where price reversed twice before in this hypothetical scenario. Open loop, DUDU will show you exactly where to put all three levels on this chart. Keep watching. Step 1 is finding the entry trigger. A trigger is a specific price action signal, not just a feeling. On the hypothetical Asset X chart, a bullish engulfing candle forms right at the support zone. That candle closing above the prior candle high is the trigger. DUDU marks the entry just above that close. First prediction. Where should the stop loss go? A. Inside the support zone, or B. Just below the support zone. Think about it this way. Price can wick into a zone without actually breaking the structure. A stop inside the zone may get triggered by normal noise, even when the trade idea is still valid. Answer B. The stop goes just below the support zone, so a real structural break is needed to close it out. On the hypothetical chart, the support zone base sits near level 33. DUDU places the stop at level 31. That gives a risk of 7 points on this hypothetical example. Now DUDU knows the exact dollar amount at risk per unit. DUDU check. Never set your stop before you know why price should not go there. Structure first, number second. Step 2 is the take profit. Many traders set a random target and miss the chart story entirely. Failure example. A trader sets a target 3 points above entry because it feels like enough. Price runs 25 points, and they exit at 3. The right approach is to look left on the chart and find the next area where supply may step in. On the hypothetical Asset X chart, that resistance zone sits near level 65. DUDU marks the target just below it at level 63. Second prediction. What is the risk-reward ratio on this hypothetical trade? Pause and calculate before DUDU reveals it. Clue. Risk is 7 points and reward is 25 points. Divide reward by risk to find the ratio. Answer. Approximately 1 to 3.5. For every 1 unit risked, this hypothetical setup offers about 3.5 units of potential reward. A higher ratio may give you room to be wrong more often and still come out ahead over many trades. Now look at all 3 levels together on the hypothetical chart. Entry at 38, stop at 31, target at 63. This is what a map trade looks like. Every level has a structural reason, not just a feeling. One thing that can throw off this process is placing the entry too far from the stop, which inflates your risk. A tighter entry closer to the trigger candle may reduce risk without moving the stop. Always check whether a limit entry at the trigger candle close could improve the ratio before placing the trade. What about partial targets? Some traders take partial profit at a midpoint and let the rest run to the full target. This can reduce stress, but it may also reduce the overall reward if price reaches the full target. Neither approach is automatically better. The best fit depends on your own plan and how you manage open trades. Pattern interrupt, DUDU quiz. Which step comes first? Stop loss, entry, or take profit? Stop loss comes first because it anchors your risk. Then entry, then target. That order protects your thinking. Recap time. Step 1. Find the entry trigger using a specific price action signal at a key level. Step 2. Place the stop just beyond the structural level that invalidates your trade idea. Step 3. Set the target at the next visible structural obstacle just before the zone, not inside it. Step 4. Check the risk-reward ratio. If the reward does not clearly outpace the risk, the setup may not be worth taking. Remember, the DUDU check, structure first, number second. Never pick a stop just because it is a round number. All of this is general education. No outcome is guaranteed, and every trade carries real risk of loss. Comment below. Do you map your stop before or after your entry? DUDU wants to know your process.